Good evening, guys. Mic check and screen share check, please. Okay. So this is Nightly Strategy Podcast for April 12th, 2022. Had a good strategy session with the Tharp Institute today. They're working through all their transition plans. I laid out a proposal and a recommendation to them that graduates of the foundations course who have created systems that fit their niche should be developed into teachers of those courses for three reasons. One of them is that by trying to teach your system to somebody else, you end up learning a lot about that system and maybe blind spots or clarifications. Hat tip to Robert Gardner, who reminded us all the time that if you can't teach your system to somebody, then you don't really know it. The second reason is that it establishes the validity and the utility of the Tharp curriculum, in that if you propose to be a teacher, you should show me your students' work. And so if the students have become the teacher, then it says something important about the quality of the instruction that's there. And a third, students that say take my work or anybody of the teachers there and has internalized it and created a niche, there's chances are other people are in a similar niche, and there's a way to directly engage with systems that fit a particular niche with minor modifications, as opposed to, let's say, fighting your way through all my material and then trying to carve out a niche yourself. That there's a kind of a fast track to successful trading, in my view, that comes from starting with the system that is already resonating with you and that you modify to your own. A couple examples of that: Glenn Osborne, my brother, Ken Hum, Luke Crockford, Bill Scheit, Jeff Boccaccio, Griff Cooper. Tim's well on the way of doing that. So you're starting to see that. I think Griff was really impressive to me, of what happens if you just work on the kata challenge: one symbol, three patterns every day, trading in public, refine your rules, trade forward with one share live, and then learn and adapt. He's become resilient, robust, and I think is well on the way to being able to teach that and then coach that, and really take it to the next level. So there was some good work on that. We talked about the Creativity 202 course. That's the Fletcher treatment, a 30-week, 30-lesson course that is, it goes even deeper than the foundations, in my view, to foundational beliefs about creativity for the long run. So we made some good plans for that, I think. And then talked about true storytelling and protreptic coaching and some of the other support courses that I'm offering to them for the curriculum. So it was a really good session. They're in a healthy professional space right now, and I feel really good about the work that they're doing. I'm pleased to see that they're building on Van's legacy and taking it to the next phase. So I'm really pleased to see that. Moving on, this is a new layout in the TC 2000 bundle that Danny has put together. We've been talking about longer term relative strength as a way to find particular patterns, and so he's developed a strategy and a layout that uses a blend of relative strength over multiple periods, similar in concept to the blended monthly rebalancing, but uses particularly relative strength, and then compares that to the S&P 500. So in that sense, it's a modified relative strength, market relative. And a quick sample of that layout is that it compares the particular, in this case, MOS, the symbol, against the S&P 500. And you can see that in this final phase right here that MOS had been lagging the S&P 500 until this transition point, and then it became the new leader, or a new leader, if you will, compared to the relative performance of the S&P. And you can see that reflected in the relative strength line compared to the S&P 500. You'll notice that that looks like a COTA 2 just before the breakout. And so that gives you some alerts right in this area that this thing may be poised for something exceptional. And, based on the TC 2000 framework, you can add all sorts of extra technical data as you like. And so that's now been incorporated into the TC 2000 bundle. I just wanted to share that with you. All right, let's take a look at what we got today. So yesterday closed poorly and had crossed just below the Bollinger Band mean and had made a new 10-day low. Today was a slight gap up, and it did not follow through. It failed further, made a new 10-day low, closed weekly at 438 and some change. So new 10-day low. It's well below the Bollinger Band mean. Next stop is the RL 90 and then Z1. You can see that we've got the whole 3-period extension is sloping downward sharply. The price extension in the RL10 is sloping downward. The RL30 has rolled over. The dragon has rolled over. So we're now in day 2 of the owl entry. So yesterday, the owl entry when it broke below. And so now it is in day 2 of the owl. The PSAR is rolling over. Now notice the accelerating downward slope of the RL 270. So as it pulls away from the all-time high, this is accelerating to the downside. So next stops the RL 90, Z1, Z2, and the collapsing dragon. This whole collection of prices right in here around 418. If that collapses, this thing is down huge because there's nothing over here to stop that fail from occurring. On the other hand, if it can get out of this tactical yellow zone, that zero state in here, and break out here, it can now challenge to get through the dragon, beyond Z1, through the RL30, through the PSAR, to the fair value, to the 10 and 30-day high. So there's some tactical trading all the way through here. That's going to be heavy sledding. It's really got to get above about 462 to really feel like it has a chance to go for the all-time high in Z2. So tough sledding, true tactical zone, automatic shorts if it breaks now below 436. Taking a look at the sectors next. So the S&P was down 0.37 today. The Qs were off 0.44. That was the worst performing of the big indexes. Emerging markets off 0.32, diamonds off 0.29, treasuries off 0.14 at just under 123. And then the Russell was the only thing in the green at plus 0.32. So not much joy in Mudville at all here. That's our dividing line between the absolute gains and losses. So let's take a look at the sectors that outperformed today. So you had lumber was only down 0.34. You have S&P Bio and Mexico off 0.2. Brazil, wood, blended large cap, crypto, ARC Innovation, flat. oops, you have the, let's see, materials. Come on. Materials, staples, lithium, discretionary up 0.22. And then wheat and precious metals 0.68. Agriculture up 0.8. Arc genomics up 0.9. Oil exploration 1.4. Energy blended commodities up 1.6 and 3%. Devon or oil, I should say, up 5%. Then individual companies that did well. Devon Energy large at 3.7. US Steel 1.6. Apple, Cliff, and Tesla. So Tesla rebounded 1.13, but could not break through 1,000 yet. So, but I think there's possibility of follow through there. And if it gets above 1,000, I would expect that to be a psychological boost. Alcoa and Robinhood round out our outperformers to the upside there. Underperformers, tech, oops. Tech was down 0.44. Commercial real estate, moonshots, FANG, blockchain, finance down 1.09. Global future of finance 1.15. Clean energy, VIX off 1.4. Bitcoin, marijuana 2.4. Ethereum and BOCT 5.8. Let's see, individual underperforming targets. Rivian off 3.4. Coinbase 2.6, PayPal 1.4, Microsoft 1.1. So a mixed bag of tech in both directions, but the non-tech winners were basically in kind of materials, defensive plays, some energy. And then I think the metals look pretty good. Tesla would be on my short list for tomorrow. Let's take a look at the reports. All right, so we're back into bearish territory, bearish normal. You can see the weakness has now caught up to the 90 and the 30 period look back, only the long term still above average. We're 1/4% underneath that. The sideways criteria is plus or minus 2%, so we're now dipping our toes into bearish. The volatility is still showing above the zero line, but continues to fall. So it's starting to accelerate to the downside. Coca-Cola, Procter, Travelers, ExxonMobil, and Verizon in the min pain. Still have in the max pains, Tesla, Intel, Boeing, Microsoft, and Nike. Those are instant shorts if they're showing weakness tomorrow. Just a couple dojis in the Dow, plenty of auto framers now that we've pulled back so far from the 10 period. We have 1.5DD and IBM at 3.1 to 1. Yeah, the energy sector, ExxonMobil, Chevron did well today. Lots of auto framers in the ETFs. Your metals and mining did really well across the board, as did energy and oil. No surprises there. Lots of good auto framers. And again, this is sorted by their risk reward. And all of the ones at the top of the stack have fallen the most from their 10-day high. So if they start rebounding, there's plenty of room for them to make gains. Conversely, if they start failing, then it's easy to believe in the downside because they've already sold off so far. So things like tech, Microsoft, Treasuries, Disney, AXP, Cisco, those are all strong candidates for one-day moves in either direction. So this is a way to do swing trading one day at a time. On the daily squeezes, only 4 symbols test out with a nice compact range ready for a breakout. Interestingly, 3 out of the 4 are in energy, oil, blended commodities, and ExxonMobil. And then you can see our 4 favorite reference points: the S&P, the Dow, EWZ, Brazil, and then Tesla. You can see their yellow zone trading stats for intraday trading. And again, I pay close attention to the range min. I take a third or a quarter of that to start computing my start point for estimating the size of the intraday MMRB. Lots of symbols in the fall on both the ETFs and the Dow. Mostly your healthcare and defensive plays and energy in the green in the Dow, and only consumer staples in the summer that's a nice defensive play. That's the last man standing, if you will. Devon Energy and Coke, Chevron, ExxonMobil, the lone standouts that are in good, and U.S. Steel, I suppose. Should add that. Gold and silver making their little tactical rebounds here. Pretty nice. Along with oil, energy, metals, and mining. Looks pretty good. I would expand that to include oil exploration. Otherwise, just getting slaughtered if you are just hanging on, hoping. The downside move is starting to accelerate. Now, the last time it did that, it responded with a nice upward move, but this already feels kind of tired and still has a long way to fall to get back to the long-term average. So this is no simple, oh, we'll just buy the dip. No, we're in the bear, and dips should be shorted, any further weakness. All right, let's run to the trades. Let's start out here. God damn it. Well, I hope that's not my monitor that's failing. Why are these all failing? Okay, stand by. Have to reload them all. Okay, fine. Thank you for your patience. Okay, so let's take a look at Tim, who is getting on board with his lessons learned. and making some adjustments, tightening up um, his exits so that when it's not working, he gets out of it. He is taking those lessons to heart, and you can see it reflected in his improved performance today, where he's up 4R. These are live forward trades. This one starts off with a collapsing dragon, gets paid. Stop and he gets the second one paid. Stop and reverse, gets paid large. Caught a two, tries a short minus, and then gets long here, gets a scratch, gets paid, and takes a micro loss and stops trading for 4. All good to go. He felt extremely choppy in the morning, but noticed that his first 3 trades adapted to that by taking quick hits, quick wins, and not sticking around too long. I think your 6.5 was just fine. I would keep using that. That worked just nice. What's the best strategy to keep the gains and when to re-enter? So we want anything where the exit happens quick and starts to reverse immediately with a universal re-entry. Just get right back in. Don't even think too much. Just get in, put your MMRB on it, and just go. That's how long you should think about it. Just go and try it. And then if it starts to fail, cut it right away. Problem solved. The keeping the gains with the trailing stop, I would keep from the maximum point. I would always keep an MMRB hung off the top. And then I would just ask myself, if I was only willing to give up that much at the start, how much off the maximum favorable excursion do I really want to give up? I really just care about getting that fat piece. And then if I get out and it starts to reverse right away, I know how to get back in. So why do you need to give back more than an MMRB? That's just a philosophical question, but you'll notice that it makes a lot of sense. Now, there's some additional ideas that if this move up to the top coincided with a Z3 excursion and it was rolling over, a 1-2 exit might be sufficient, especially on 5-minute charts like you are trading. So a 1-2 and just get out, because you know how to get back in. And then I would rather be on the outside wishing I was in than on the inside wishing I was out. You will find that to be good. And then don't overthink this one. What's more important is, how can I maintain my emotional resilience so that I can quickly get out and get back in without feeling like somehow I was wrong? Because you can't know what it's going to do. I would much rather that you spent your effort on how can I increase my resilience so I get more bites at the apple, as opposed to trying to optimize some little mythical rule that will be perfectly adapted to all of these different kinds of market conditions. Look at how tight and grinding this was, and then a nice big run, but then it didn't follow through and it was grinding, and then it exploded up and down and up and down. Do you think there's one simple rule that's going to give you the best strategy for all those? No, it is the MMRB and developing the resilience to keep fighting. You take a lot of punches, you throw a lot of punches, you keep going, you take a break, you get right back in there and keep swinging, and you come out of there with the net of trading. That's what you do. It's a dogfight. It's not a piece of crystalline art that is fragile and perfect in every way from every angle. It's a dogfight. Here's Glenn's follow through from yesterday's Intel frame. Here was the close. Gapped up, sold off, started to recover. He buys the Kata 2 above, when it holds above the VWAP, puts his standard risk box on it. It runs up. It gets about a 1, 2, 3, 4 exit before it hits the sniper. 0.8. Might have had a kata 2 to the downside. There's an owl right here if you want it. There's a crossing of the VWAP right there if you want it to send. And this is starting to compress. So maybe if this breaks up through here with it, there's that. And now that's where it closed. So he puts that trade frame on it and he's ready. He's ready to go. This, by the way, was the frame from the day before. This is still a good entry. If you like that entry here and it pulls back and holds and starts to roll up, now you have a higher low. That makes this a kata 2, an hour into the day. Lather, rinse, repeat. His Apple trade takes a fractional loss. That's a nice effort on the short side. If it breaks through the VWAP and then the 270, this thing comes down and tests here, and then it's going to come all the way back here. So he's really playing for the opportunity to get leg 1, 2, 3, and 4 big moves. It didn't, so he quickly scratches and then re-enters, gets paid. 1.1 when he's right, minus 0.4 when he's wrong, net 0.7. That is correct. Microsoft. This was, I'm sure, a span of control issue. This would have been the same standard entry that you saw in the first one with Apple. Would have gotten paid. Gets into the Z3 pinch, plays the breakdown at Z2, standard risk box. Might have added a second one here, or here, or here, or 4, and that's a perfect exit. Notice the power of the PSAR to keep you in. It just shepherds it all the way down until it's thirsty and comes back to the river. 1.4 on a single position. This could have easily been 3. Nice work. Treasuries, there wasn't much wiggle room in there. He takes a minus 0.8 on this one. This was a perfect effort on the breakdown below the VWAP and the PSAR. And now you're thinking, man, if this breaks below here, it's really coming all the way back. But it didn't, so he scratches, gets short, recovers, net 0.2, correct. Glenn with the kata challenge. This is the CD only in EWZ. You would notice that your SSC is here and would get paid huge. Kata 2 gets paid. Kata 2 gets paid. The CD is a micro loss. Stop and reverse gets paid. Scratches. Collapsing dragon gets paid large. 0.3 net just for the CD. When you, with just the kata 2, and re-entries, 3.8, all the ones we just talked about, piece of cake. If you integrate them all 3 patterns combined, you get a 4.2 day. If you guys aren't studying his work and making that your own, then I don't know what to tell you. I'm trying hard to persuade him to teach and coach it as a niche. And I've got 3 other guys ready to do it if he doesn't want to. All right, Glenn's multi-time frame critical state frames. Look at that tiny little acorn ready to explode in either direction after a huge move down, the first leg back, and then stability, intention, ready to break. Oh, is that sweet. So here was the collapse and then the base. First leg up and then the profit preservation, and now it is stabilized right here. So the trading range is from here to the upside to here to the downside. Which way is it going to go? Doesn't matter. As long as it goes, it's going to go much farther than the tiny little risk box that you are accepting. I'd like to see it go down because this is meta And every time it goes down, Zuckerberg loses money, which I'm in favor of. MTCH, the Match Group, never heard of them. Technology sector, internet content. So getting smoked, one little bump up and then fail. And now it's right sitting on a critical state at 90. If that breaks, it's down huge. So he's got his almost a 5-day down that ends up right here. The trading range is from here to there. So a breakdown or a break up is going to reward. Here's where he'd put a second position. I like that. And again, you want to take that in either direction. And you can see why this thing would fail right away. If this failed right away, I think my stop would be right here. So I could get a position size on a $2 instead of a $4 risk. I want twice the position size on the downside. And then the upside is easy to see. It has to get through 98 and then through 102. And that's where he wants his second position, deep in the money. Apple. So this is a continuation trade for him because he traded that one today. Kind of an obvious one. If this breaks down, it's failing large. There's a nice easy move to 172. It's going to take some effort to get through there. So if you've got money in hand and you try your second position, but it just starts waffling, cut it. But if that second position might be just enough to burst it through here and close that gap, and then it'll run fast to 176 and you'll have two positions on ready to go. So this is a perfect critical state. Win the casinos. Let's see what we got here. Yeah, the manic depressive sell-off that is now at the bottom of the stack and just waiting for despair to kick in. So you'd love to see this thing collapse further. And then a second position, if it breaks below the collapsing dragon, that'll be huge. But if it does hold, which it could, because you got 3 levels of support, and then gets it here, and a second one here, and a third one there. Yeah, that could happen in one day. That's only $6, but that's a 15% gain from here to here. And this thing can do that. If you look at the size of the daily bars, this is actually a range compression squeezing in. You can see how the Bollinger Band means are converging. So this is a range compression ready to break either direction. Nice. Devon Energy was a big winner today. Most of that was in the gap. But I think I might get this one here instead of waiting for that. I might just make that a tighter, like a 50-cent, because I actually could now trade that. That's now 2-to-1 to 63.50, and only because I trade Devon so much, I might really be willing to do that with a MMRB. Look, is 1/3 of a frog box. So whereas in Frog 1.0, we would wait for an entry here, an open there, and move one frog box off the bottom before it would go, before we enter. Now you can get that here and have 2 units of reward for your little MMRB. So you got 2R in hand at a position where in the past, 3 to 5 years ago, we'd have been happy just to take that entry. So one of the things that you get from refining your understanding of your system and not just blindly following it, but studying it, is you find ways to make incremental improvements that reduce your risk, gain the rewards where other people just see noise. You're seeing a 2R opportunity. That's what you get by being a student, a scholar of the game. So what can we say about Devon Energy? Yeah, I think I'm ready to go quicker. And then if it fails, I'm still just going to use a 50 cent and it's going to come down to 60. And that's $2 divided by 50 cents is 4 to 1 on the downside. Wouldn't be surprising. And you get your second position deep in the money. Third position, if this collapses, and you love this. Could it get back to 58 easily? Yeah, it did before in terms of the where the long-term fair value was. Notice that it finds that as support all the time. So if this does roll over and then starts to reverse, you cash that. You cash the short. You expect it to find support at 58. Argen used to be so joyful. Now it's been cut in half and is right at the bottom of its stack. Wow. Is that ready to collapse in a huge way? It's already below that level. If that breaks, smash it. It's already had 2 legs down. There's nothing about this that says, oh, this is going to work. That's why if it does start to work, you just hold your nose, you take a $4 risk, and you let it run. Because there's no reason to believe it could work, it might work. Don't need to know why or care why. All right, Woj, let's see what you got. Much better calmitude from yesterday. He was doing the WMB3 long plus the COTA 2. Scroll this down a little bit so we can see his work. Oversold, uptick. Boy, I want that so bad. This is where the MMRB off the low of the day gets you in. Like, even if you got in right here, you'd be happy. Good try. Better re-entry. Got paid. Should be buying this. Probably should be scratching. The COTA 2 entry should have been here. There's probably one there too. Yep. There's an uptick right there. Good scratch. This is close. I might have been tempted on this one. Probably would have scratched. Here's your uptick. It didn't fire. So when this thing is supposed to enter but doesn't, there's a fail. Here's when you're supposed to buy. There's an instant reversal, fail. Here's when you're supposed to buy. You did get paid. You might take this one as you'd see that as a collapsing dragon in the RLCO BB framework, the standard frame. This would be a CD for sure. All right, 1.2, pretty good stuff. I feel another niche system in the making there. Much better job tightening up your stops. And that, my friends, is that.